There are 7 forms sitting inside the Social Security Administration's own filing cabinets right now attached to your name, your work history, your spouse's record, and if you've lost a spouse. Their record too that can add real money back into your life this year. Some raise your monthly check, some lower what's being pulled out of it. One of them alone can free up over $5,000 a year. You're currently spending out of pocket on prescriptions 7 forms. And before I go one sentence further, I have to clear up the single biggest misunderstanding about this topic, because it's the exact reason most people who legally qualify never file a single one of them. Here's the misunderstanding. People think Social Security is a fixed number. You worked. The government did some math, and that's your check for life. Take it or leave it. That is not how this system was actually built. It was built with dozens of adjustments, corrections, and elections woven into it, and every single one of them requires you to raise your hand first. Nothing on this list gets applied automatically just because you're entitled to it. Well, some of you are thinking, I'm comfortable, I've got a pension, some savings, I don't need to go digging through government paperwork. You're wrong, and here's why at least 2 of these 7 forms have nothing to do with your income. One exists because you were once married, one exists because Medicare charged you a premium penalty you're allowed to appeal no matter your net worth. This is not a poverty program, this is a working and retired middle income program. Built for people who paid into the system for decades and are simply asking for what the rules already promise them. Some of you are thinking the opposite. I'm already on a fixed income. I already get some help. There's nothing left here for me. You're wrong too. Being on Social Security already doesn't mean your record was calculated correctly. And it definitely doesn't mean you're receiving the Medicare help you actually qualify for. And here's the part where divorced folks usually check out and where you really shouldn't. If you were married 10 years or more and you haven't remarried, one of these forms lets you claim money based on your ex-spouse's work record. They are never notified. Their check never changes. Not by $1, yours might. So this is for every one of you married, widowed, divorced, comfortable, or stretched thin. Let me make this as concrete as I can. A widow whose husband claimed his own benefit early at 62 instead of waiting could be living on several $100s less every single month than the rules actually allow her to receive for the rest of her life. A retired couple whose income crossed a Medicare surcharge threshold 2 years ago, even briefly, could be overpaying a few $1,000s a year in premiums they no longer qualify to pay. A single retiree living on $18,000 or $20,000 a year could be leaving over $5,000 in prescription help on the table every year, simply because nobody ever told them the application existed. That's true whether you're in Ohio, Arizona, or anywhere in between. Run any one of those numbers out 10 or 20 years, and you're no longer talking about a paperwork inconvenience. Well, you're talking about the difference between a retirement with breathing room and one without it. There is real money on this list with your name already on it. So why doesn't anyone tell you this? Here's the part that should make you angry, but at the system, not at any one person. The Social Security Administration has zero financial incentive to mail you a form that increases what it pays you. They don't call, they don't send a letter on your 65th birthday that says, by the way, if your late spouse claimed early, here's a rule that guarantees you a floor on your survivor check. They process what you file and nothing more than that. Your bank doesn't tell you. Your Medicare Part D plan certainly doesn't volunteer that your premium could drop through extra help, less revenue for them if it does. Even a well-meaning tax preparer usually isn't trained on Social Security claiming rules. That's an entirely different specialty. That is the entire reason this list exists and stays quiet. Every single form on it requires you to apply. Nobody applies on your behalf, and the overwhelming majority of people who legally qualify simply never knew there was a box to check. What I do on this channel is take the parts of the Social Security and Medicare rulebooks that are written in language built to be skimmed past and translate them into something you can actually act on this week. Here's what's coming in order. We'll start with the 2 most common ones. The spousal application almost nobody realizes is separate from your own retirement claim. And the widow's or widower's application that most people file at exactly the wrong age. Because of one rule, the Social Security Administration will not explain to you unless you ask the right question. From there we move into Medicare, a form that lowers what's being pulled out of your check every month, and a second one that can hand back over $5,000 a year at the pharmacy counter, and as far as I can tell. Most explanations of this program leave out that it quietly starts a second application at the same time. Then we close with 3 forms I went digging for specifically, a small one-time payment almost nobody files in time. A correction that can fix a mistake sitting in your file right now without your knowledge, and the last one, a form that lets you legally cancel your own Social Security application and refile it later for a permanently higher check. Stay with me for that last one. Being legally entitled to a Social Security or Medicare benefit and actually receiving that benefit are two completely different things. The law does not refund you automatically. Nobody mails you a check out of kindness. You have to know the form exists, and you have to be the one who walks in or picks up the phone and files it. Item 1. SAT-2 application for spouses or divorced spouses benefits. Here's exactly what it does. It lets you collect a benefit based on your husband's, wife's, or ex-husband's or ex-wife's earnings record, not your own, who qualifies if you're currently married. You generally need to be at least 62, and your spouse needs to already be collecting their own retirement benefit. If you're divorced, the marriage needs to have lasted 10 years or more. You need to be currently unmarried. And here's the detail almost nobody knows: your ex-spouse doesn't even need to have filed for their own benefit yet, as long as you've both been divorced for at least 2 years. Real dollar impact. The average spousal benefit nationwide is currently just under $1,000 a month at your own full retirement age. It can be worth up to half of what your spouse or ex-spouse qualifies for at their full retirement age. Exactly where it lives. You file the SSA-2 directly with the Social Security Administration online at SSA.gov, by phone, or at your local field office. How to actually get it. If you call, here's exactly what to say: I'd like to apply for spousal benefits on my husband's or ex-husband's Social Security record. That one sentence tells the representative exactly which form you need. The most common way people lose it: if you're currently married and you've already filed for your own retirement, the spousal portion is usually added in automatically. That's called deemed filing. But if you're divorced, nothing is automatic. Your ex-spouse's record does not know you exist until you file. And filing costs your ex-spouse nothing. Their check never changes because you claimed against their record. That form is about a living spouse's or living ex-spouse's record. The next one is about a spouse who's already passed, and it's the one where a single filing age decision made years ago can quietly cap what you're owed for the rest of your life. Item 2. 10. Application for widows, widowers, or surviving divorced spouses benefits. This form claims a survivor benefit, a monthly check based on what your late spouse or late ex-spouse earned and paid into Social Security over their working life. Who qualifies? You can start as early as age 60 or 50 if you're disabled, if you're a surviving divorced spouse. That marriage needs to have lasted 10 years. And here's the part that makes this form different from every other one on this list. It is not subject to deemed filing. That means you're allowed to claim a reduced survivor benefit at 60 while letting your own retirement benefit keep growing, untouched, all the way until 70 or the reverse. Claim your own smaller benefit early and switch to the full survivor amount later. Nowhere else in the entire Social Security system do you get to sequence two different benefits against each other like that. And here's the number that should make this land. The average survivor benefit nationwide right now is just under $2,000 a month, call it $23,000 a year. That's a number already attached to your name whether you file for it or not. The only question is whether you ever actually see it, exactly where it lives. Filed with the Social Security Administration using Form SSA-10 by phone, at a field office, or through an appointment scheduled at SCOV. How to actually get it: call and say, I need to apply for widows or widowers benefits on my late spouse's Social Security record. Bring the death certificate and your marriage certificate. If you're a surviving divorced spouse, bring the divorce decree too. And now the part where I need you to slow down and actually listen, because this is the single most expensive mistake on this entire list. If your spouse claimed their own Social Security early before their full retirement age, there's a rule inside the system, informally called the widow's limit, that can cap what you're allowed to collect at the amount they were actually receiving when they died, not the full amount they would have gotten at full retirement age. Most people don't find out this rule even exists until a Social Security representative happens to mention it, almost as an afterthought. The one piece of protection built into that rule. The law guarantees you at least 82.5% of what your spouse's full retirement age benefit would have been, no matter how early they claimed. Picture it this way: say your spouse's full check would have been $2,000 a month, but they claimed early and locked in $1,400. The floor protects you at roughly $1,650 more than what they were actually collecting, but still well under the full $2,000 they would have gotten by waiting. Whether you should claim your own survivor benefit at 60, at your survivor full retirement age, or somewhere in between depends entirely on that floor calculation. And Social Security will not run that math for you unless you specifically ask them to. Both of those forms deal with money coming from a spouse's record. The next one has nothing to do with marriage at all. It's about a bill quietly getting pulled out of your check every single month. Item 3. Set 44 Medicare Income-Related Monthly Adjustment Amount. Life-changing event. Here's exactly what it does. If your income 2 years ago was high enough, Medicare adds a surcharge on top of your normal Part B and Part D premiums, and that surcharge gets deducted directly from your Social Security check. The SAF 44 lets you ask Social Security to recalculate that surcharge using your current income instead of the old higher number. Who qualifies? There's a specific closed list of 8 events: marriage, divorce or annulment, death of a spouse, work stoppage, work reduction, loss of income-producing property, loss of pension income, or an employer settlement payment tied to a bankruptcy or business closure. If your income dropped because of one of those 8, you qualify. If it dropped because of investment losses or a Roth conversion, you don't. The list is closed, and Social Security enforces it strictly. The real dollar impact. Depending on which surcharge bracket you drop out of, this can save you anywhere from around $1,100 a year to over $6,000 a year per person on your combined Part B and Part D premiums, exactly where it lives. Filed with the Social Security Administration using Form SA-44, mailed, faxed, or dropped off at a local field office, along with proof of the life-changing event. How to actually get it: call and say, I had a life-changing event and I need to request a new income-related monthly adjustment amount determination using Form SF-44, have your proof ready, a divorce decree. A pension termination letter, whatever fits your situation. The most common way people lose it: they wait for Social Security to catch up on its own, or they assume nothing can be done because their tax return from 2 years ago is already locked in. It isn't. File as soon as you have documentation of the event relief isn't unlimited going backward, so the sooner you file, the more months of savings you actually capture. That form lowers what's being taken out of your check. The next one hands money back a completely different way through the pharmacy counter. Item 4. ESSA 2020 Application for Extra Help with Medicare Prescription Drug Plan Costs. Here's exactly what it does. This is Medicare's low-income subsidy, extra help for short. It covers some or all of your Part D premium and deductible and knocks your per-prescription cost down to just a few dollars. Who qualifies? For 2026, that's roughly $23,000 a year or less in income for a single person, around $31,000 for a married couple, with somewhat higher limits if you live in Alaska or Hawaii. Here's the detail people miss on the resource test. Your home, your car, your life insurance, and your burial plot don't count against you. The real dollar impact. The Social Security Administration's own estimate is that extra help is worth about $5,700 a year to the average person who gets it. And here's the part that, as far as I can tell, most explanations of this program leave out entirely. Filling out the Assess 120 doesn't just apply for extra help. Buried in that same form is a box that, unless you check it to opt out, automatically forwards your information to your state to start a second application for a Medicare savings program that can cover your Part B premium and, in its most generous version, every remaining Medicare deductible and copay you'd otherwise owe. In some states, that second program even uses a higher asset limit than the federal minimum. So being turned down once somewhere else doesn't mean you'd be turned down here, exactly where it lives. File this SA-120 with the Social Security Administration online, by phone, by mail, or at a field office. How to actually get it: call and say, I'd like to apply for extra help with my Medicare prescription drug costs. One phone call, and depending on your answers, it can start 2 applications at once, the most common way people lose it. Federal estimates suggest as many as 2 million people who qualify for extra help have never applied, most of them assuming their modest savings account or their paid-off home disqualifies them. It doesn't. Apply and let Social Security tell you no, rather than deciding that for yourself. That's the biggest recurring number on this list. The next form is small by comparison, but it comes with a hard deadline most families miss during the worst week of their lives. Item 5, SA-8 Application for Lump Sum Death Payment. Here's exactly what it does: a one-time payment of $255 paid to a surviving spouse, or if there's no spouse, to an eligible child. Who qualifies? You generally need to have been living with the worker at the time of death, or already receiving certain benefits on their record if you were living apart. This amount hasn't changed since 1954. Congress simply never indexed it to inflation. The real dollar impact. $255. It's not going to change your retirement, but it's money you're already owed and it costs you nothing but a phone call to collect. Exactly where it lives. This one isn't available online. You apply directly through Social Security by phone or in person. How to actually get it, call and say, I need to apply for the lump sum death benefit for my late spouse. Have both Social Security numbers ready, along with a certified copy of the death certificate though. If the funeral home already reported the death to Social Security, they may already have it on file. The most common way people lose it, the clock. You have 2 years from the date of death to file. After that, this one is gone for good, no exceptions, no appeal. That's a small, fast-moving deadline. The next form has almost the opposite problem, a mistake that can sit quietly in your file for decades before it ever costs you anything. Item 6. 708, Request for Correction of Earnings Record. Here's exactly what it does. Your current or future Social Security benefit is calculated from your highest 35 years of earnings. This form fixes your file when a year is missing, or shows less than you actually earned. Who qualifies? Anyone with an earnings record, which is to say, everyone. Errors happen from incorrect Social Security numbers, name changes after marriage or divorce that never got updated on file, or an employer that simply never reported your wages correctly, the real dollar impact. There's no single number here because it depends entirely on your own file. But if even one of your errors falls inside what would have been one of your highest earning 35 years, the correction can permanently raise your monthly benefit for the rest of your life. And for any survivor or spousal benefit, calculate it off your record after you're gone, exactly where it lives. File the SSA 708 directly with the Social Security Administration, by mail or at a local office, along with proof, a W-2, a pay stub, or a tax return for the year in question. How to actually get it: before you even call, go to SESA.gov, sign into your My Social Security account, and pull up your full earnings history. Compare it line by line against old tax returns or W-2s. If you find a gap, call and say, I found an error on my Social Security earnings record, and I need to file a correction. The most common way people lose it: nobody checks. The Social Security Administration does not proactively flag these errors for you. The responsibility sits entirely with you to review your own statement. There's generally a window of about 3 years, 3 months, and 15 days after the year in question to fix it easily. Miss that, and a correction may still be possible. But it takes real documentation and real patience. 6 forms down, all of them about claiming or correcting money that's already yours by the rules. The last one is different. This is the one I promised you at the start, the closest thing Social Security has to a genuine do-over. Item 7, SA 521, Request for Withdrawal of Application. Here's exactly what it does. If you've already started collecting Social Security and you now realize you filed too early, this form lets you cancel that application entirely as if you'd never applied, so you can refile later for a permanently higher monthly check. Who qualifies? You have to be within 12 months of your very first month of benefits, and you can only use this once in your entire lifetime. Past 12 months, this specific door is closed, though, a full stop. Or suspension of benefits at full retirement age is a related option worth asking Social Security about separately. The real dollar impact. There's no single average here either, because it depends on how many additional months or years you're able to add before refiling. But here's the shape of it: waiting from 62 to full retirement age typically raises your eventual check by around 30%. And every year you wait past full retirement age up to 70 adds roughly another 8% on top of that, permanently, with every future cost of living increase calculated off the higher number. Exactly where it lives. Filed with the Social Security Administration using Form S521 at a local field office. How to actually get it: call and say, I'd like to withdraw my application for Social Security retirement benefits. Be ready to repay every dollar you've received so far, including anything withheld for Medicare premiums or taxes. The withdrawal only works if the slate gets wiped completely clean. The most common way people lose it: they assume once they've filed, that's final. It isn't. For 12 months, you have a legal escape hatch most people never learn about until it's already closed. If you're within that window and you're having second thoughts about when you claimed, this is the form that matters most on this entire list. So here's where all 7 of these land. The spousal and widow's applications aren't automatic. Even the widow's limit floor I told you about, the one that protects you at 82.5% no matter how early your spouse claimed, only helps you if you actually file the SSA 10 and ask about it by name. The SSA 44 and the SSA 1020 aren't going to lower themselves. Medicare has no incentive to volunteer either one. A lump sum payment has a 2-year door that closes whether you knew about it or not. Your earnings record won't fix itself, and that do-over I promised you at the start, the SA521, is the closest thing to a second chance this system offers anyone, but only within 12 months of your very first check. Being legally entitled to this money and actually holding it in your hand are two different things. The system will not close that gap for you. You have to. So this week, do just one thing. Create or log into your My Social Security account at SSA.gov and look at two numbers side by side what you're currently receiving and what your full earnings record actually supports. That single check tells you which of these 7 forms belongs to you, and if you've got a parent, a sibling, or a neighbor who's been living on Social Security alone. This is worth 20 minutes of their time. Send this to them. It might be the most valuable form they never knew to ask for.